Thanks very much, Devon. Yes, indeed, I do have him with me. His name is Mgolisi Mgojo, and he's the new CEO of Exxaro, having taken over from Sipho Nkosi. Thank you very much for joining us, sir.
Thank you, Mpumi.
Good stuff. Now, I see that you managed to sell increased volumes of particularly coal, despite closing a couple of assets. Is this a product of more demand locally or internationally?
Well, it is a combination of both. One of them is the fact that we have been able to secure additional entitlement as a result of the total coal transaction, and therefore that has enabled us now to be able to export an additional 4 million tons of coal that we didn't have before coming out of those assets. And part of our strategy as part of the turnaround of that assets, ECC as we call them, was to actually direct a lot of that coal to the export market by creating other new products that were not there before. So that's where some of that additional volumes came from to a large extent.
Now, I saw a report out of Australia saying that coal prices there have risen by about 35% since June up to now. Do you expect this upward price momentum to continue for coal in particular, and what's informing your view?
Well, our coal outlook says to us that in the second half we should be seeing an increase of prices, and obviously the big question is will it stick, and for how long will it increase? I think there's just overall there has been some increased stimulus that we are seeing taking place in the Asias. We see a lot of demand also coming out of India in terms of volumes and volume demand. And as a result, as we will see in our results, we've highlighted that India is where we've been seeing a lot of our new growth in terms of our exports. In the local market, the current levels are where they are. It's a very highly competitive market, given the fact that, with the prices that were there in the, earlier on, 6 months ago, a year ago, being very subdued. A lot of the coals that used to go to the export markets was trying to find a home in the domestic market. So yes, most of the growth has been coming from the export side.
Just tell us a little bit about the assets that you had to shut down. Are they currently on maintenance, on care and maintenance, or have you sold them off completely? I ask this because obviously if you're beginning to see an upward trajectory in not only demand but also in prices of coal, then it would have been unfortunate that you had to get rid of those assets.
Well, also those assets had come to the end of their life. And so invariably what would happen is that because they've got things like washing plants and things like sidings as part of the asset, you would find that there will be other players who are your neighbors who, instead of going to build those new assets, would be selling those assets to them, so that now they already have operations that can be fully utilized from day one. And those are the assets that we tend to sell. So it's really emanating from those mines which have come to the end of the life of our own reserves, but are still usable in the hands of somebody else in terms of the washing plants and the sidings.
Okay, clarity. Thank you for that. And just in terms of your cost management, we know that's one of the things that you guys look at very closely. How have you been managing costs? We know that there was a process of job losses and so on. Just tell us how many jobs were lost in the period under review and what you've been doing generally with costs.
Well, let's start with the cost side. We started some 2-3 years ago implementing an operational excellence program, whereby basically each mine will identify 5 key focus areas of which they're going to be concentrating on, and within each of that area we quantify the type of productivity or efficiency or the type of revenue generation or the type of operating income we're expecting for each of those initiatives. And we drive each of those initiatives very, very hard. We project manage them. So each mine has got to account for 5 of those within each every year. And once one has been completed, we put a new cycle in place. So we've done that very, very successfully. And hence why, if you look at our results, you will see that on the cost side, we've been able to manage and save a lot of that. The other one was due to the fact that we did open up VSPs as part of our restructuring process.
What are VSPs?
Voluntary severance packages, to try and actually reduce our costs. So we had a number of our employees, some who were closer to retirement, who decided that maybe it is an opportune time to take those voluntary severance packages. And some of those cost savings now are beginning to come through. You also would have known that our coal supply agreement had come to an end with our Anot mine, which is a cost-plus mine with Eskom, and we did announce to the market that we were going to be going through a huge downscaling of that, and we have managed to, I think it was about 100 to 150 jobs that we were able, out of the 1,800, to save by actually transferring some of those people to our other operations. Others took VSPs. Others then were actually kept, about 350 that were kept to do now the final closure of that particular mine.
Okay, well, we're going to leave it there. Thank you so much for your time, sir. It was nice to have you with us.
Thank you very much.
That was Mxolisi Mgojo. He's the CEO of Exxaro. It's back to you, Devon.